Friends, in today's video, we will discuss Bandhan Small Cap Fund. Since its launch about 5.5 years ago, this fund has been delivering consistently strong performance. In fact, it has outperformed many well-established funds in the small cap fund category and has secured the number one rank in 2-year and 3-year performances. Its 1-year and 5-year returns have also been quite outstanding. Overall, we can say that when it comes to returns, this fund has consistently maintained a position among the top 1, 2 or 3 across all time frames: 1-year, 2-year, 3-year and 5-year ever since it came into existence. This clearly shows how consistently it performs, and it has also outperformed the category averages by a very comfortable margin. At the same time, its expense ratio is also very reasonable, well below the category average, and its alpha is very high. This means the fund has the potential to deliver much better returns compared to its benchmark and also other funds in the same category. In this video, we will discuss the fund's investment strategy, the level of risk involved, whether or not you should invest in this fund, and its future prospects. So far, its performance over the last 5 years has been very strong. But the big question is, will it be able to maintain this performance going forward? When it comes to returns, this fund has been consistently outperforming its category, and that too with a significant margin. For instance, in the past 1 year, while the small cap category delivered just 0.18% returns, this fund has managed to generate 5.68% for its investors. That is a clear sign of strong outperformance even in the short term. If we look at the 2-year performance, the picture becomes even more impressive. The small cap category delivered 20.57% returns, whereas this fund delivered 34.37% returns, outperforming the category by nearly 14%. No surprise that in the 2-year time frame, this fund holds number one position in its category. Even in the 3-year time frame, the story is the same. The fund again holds the number one position with 31.42% returns compared to the category average of just 21.90%. That is a huge 10% margin of outperformance. Over 5 years, the fund ranks third in the small cap category. Here too, it has delivered 33.98% returns compared to the category's 30.99%. Once again, ahead by a comfortable margin. The most important point to note here is that no matter which time frame you look at, 1 year, 2 year, 3 year or 5 years, this fund has consistently outperformed its category. And consistent outperformance means its returns carry both reliability and stability for investors. Now let us talk about the fund's investment strategy. This fund follows a value investment strategy and not a growth investment strategy. Normally, funds that follow a value investment strategy tend to have more stability and lower risk, but their performance is usually not very outstanding. However, the unique about Bandhan Small Cap Fund is that despite following a value investment strategy, its performance is on par with and sometimes even better than funds that follow a growth investment strategy. As we have already seen, it has consistently maintained top rankings number 1, 2 or 3 in the small cap fund category. The fund's portfolio turnover ratio is only 36%, while the category average is over 100%. That is nearly 1/3 of the category, which clearly shows that fund follows a buy and hold approach, buying quality stocks and then giving them time to grow, generating strong returns and thus supporting NAV of the fund. The fund's expense ratio is also just 0.40% compared to the category average of 0.63%, which is an added benefit for its investors. Currently, the fund is invested about 88% in equities and around 12% in debt and cash. This also works in its favor. If the market falls, fund can deploy this cash at lower prices, which could further boost performance of this fund. In terms of diversification, the fund is highly diversified. In fact, we can call it overly diversified. It holds an exceptionally large portfolio of 201 stocks compared to the category average of just 87 stocks. Normally, such a huge portfolio dilutes returns. But what is exceptional with this fund is that thanks to its brilliant stock picking strategy, the fund's returns haven't been diluted at all. Instead, despite being so diversified, which naturally makes it much less risky, it has delivered excellent returns. Looking at its sectoral allocation, the fund is slightly overweight in capital goods, finance and services, with about 22.81% of its corpus invested in these top three sectors. Here the category average in the top three sectors is 19.98%. So while it is only about 3% higher than the average, this small concentration is actually important. Too much diversification, whether in stocks or sectors, can dilute returns. A little concentration, like we see here, supports growth potential. Coming to its asset allocation, the fund has invested 8.81% in large caps compared to the category average of 5.31%. This slightly higher allocation to large caps adds stability to its returns. Naturally, this comes at the cost of investing less in small caps, that is only 69.73%, compared to the category average of around 79%. That is nearly 9% lower exposure to small caps. Theoretically, this should mean lower returns because small caps generally deliver higher returns than large caps. But as we seen in its performance, that has not been the case here. Despite investing about 9% less in small cap compared to its peers, the fund has consistently outperformed the category averages. And this is where credit goes not just to its investment strategy but also to fund's exceptional stock picking ability. The fund managers are so precise in picking the right stocks that even with the lower allocation to small caps, the fund continues to deliver superior returns and outperform the category averages consistently. When we look at the fund's risk ratios, category beta is just 0.83. However, this fund's beta stands at 0.90. This higher beta indicates that the fund's NAV is likely to see somewhat greater fluctuations compared to the category average. Moving to the Sharpe ratio, which tells us how efficiently a fund generates returns relative to the risk it takes. Here the numbers are quite comfortable. The category average is 1.17. While this fund's Sharpe ratio is at 1.61. A higher Sharpe ratio is always better, and in this case, it reflects strong performance on a risk-adjusted basis. But the real standout is the alpha ratio, which measures how much extra return the fund is generating over its benchmark or category. Here the difference is striking. The category's alpha is only 1.75. While this fund's alpha is an impressive 6.77. This clearly indicates the fund's strong ability to consistently outperform its peers in terms of returns. In conclusion, if you are already invested in this fund, you may choose to stay invested. It is a good fund, and even if you are going to make a fresh investment, you may consider this fund. Since inception, the fund's performance has been highly consistent, and it has consistently outperformed its category as well. By following a value investment strategy and being highly diversified, it carries relatively lower risk. Investors generally look for low risk along with high returns, and this fund successfully delivers on both. It allows you to take limited risk while earning consistently strong returns for your investments.